Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and past results are not necessarily indicative of future results. We're recording this on Monday, November 3rd. With me this week is Gavin McPherson. He's a risk management consultant that works with our dairy team. His focus is primarily on livestock, though, on the meat side of things. Gavin, how long have you been with us?
Happy to be here, Nate. I started just a little over 5 years ago now here with StoneX.
Yeah, was it before or after the world shut down? I don't remember.
I was kind of during the middle of it,
Okay.
October of 2020. So I think I didn't even make it into the office for 6 months or so before I got to meet everybody physically.
And what was your background? I know you were in futures brokerage before.
Yes, I started this business in 2000 and began as a retail broker. And worked for Daniel's Trading originally, which is kind of a full circle now. Kind of a few of the old team there is in our office, the StoneX office in Chicago, and then bounced around a couple other places. Eventually at CIH Commodity and Ingredient Hedging, and I was there for about 16 years, helping develop the margin management tool that they use.
Okay. So I wanted to talk to Gavin this week because the beef market has become, or the cattle market has become increasingly important for U.S. dairy farmers. It's always been an important part of the revenue stream for dairy farmers. I think historically, the slaughter cows and calves the dairy farmers were selling were making up about 5% of farm revenue, at least from the milk side of things. Some of these farmers are also producing grain as well, but from the milk and beef, it's about 5% of the revenue. But U.S. farmers are increasingly crossbreeding the dairy cows with beef, and the price of those crossbred calves has been increasing exponentially over the last 2 years. And cattle pricing has been pushing up to new record highs, which is pushing up the revenue that U.S. dairy farmers are earning from their slaughter cows. So I think here during 2025, somewhere in the range of 20 to 25% of an average dairy farm's revenue was coming from calf and beef sales, which is a big increase from where it used to be. So, Gavin, I believe I'm correct in saying that cattle pricing reached new record highs this year. What's been driving that?
I think we go back probably a year and a half to the kind of the situation that we had out west, and I say out west just relatively speaking to where the majority of the cattle are finished. But we had a severe drought, and we had a lack of feed, and the reduction in the amount of cattle out there for beef in particular went through a pretty big swing, and so uh, we haven't been breeding back. We have, not been retaining heifers relative to the value that producers have been able to receive for these animals. And so one thing sort of feeds on the other. And so you've got high prices that sort of continue to magnify those high prices relative to, trying to expand the breeding herd and the herd in general. The combination of that and at the same time, um, a lot of the new tariffs and other things that occurred, but I think the consumer and the value of beef going through that same period has generated the consumer demand for beef at the prices that we've seen it go to, and up until here just recently was sort of insatiable. We kind of were very focused in on consumer demand, consumer confidence, what the equity markets are doing in terms of how the consumer is spending money, and are they willing to continue to spend money on high priced beef. And so that's something that, it's pretty shocking that has been able to be, continued. The consumer demand for beef has been somewhat insatiable, which has led these cattle prices to run the way they have. We also saw about a year ago, I believe it was around the beginning of November here, just almost exactly a year now, that the Mexican border was shut down from bringing in feeder cattle from Mexico. As it were, back when that occurred, we didn't think much of it because we didn't really think that that it would be that long of a period of time that border would be shut down, and B, that it wasn't a significant amount of animals that really was going to matter. At the end of the day, it's about 1 million animals, or about 2% of our herd that come across the border from Mexico, which again, in the big picture, doesn't seem like a lot, but when it's zero, it equates to being something, especially when we're, in a situation of in the decline that we were in the herd itself. So, combination of things there that have led to high cattle prices to put us in the situation we were or are.
And the Mexican border was shut down due to New World screwworm, right?
Which is come up from Central America, kind of came up migrating up through Mexico now, as I believe the latest data has the most recent case about 70 miles from the Texas border.
I covered it in one of the weekly reports a couple of months ago. It's going to be interesting. The experts are saying like 50-50 chance that it makes it to the US, but not here yet. So, we've had this big run up in cattle pricing which has been supported for dairy farmer revenue. But here a couple of weeks ago, I think October 16th, the cattle market kind of peaked and dropped hard the following day. What's been going on in the cattle market over the past 2 weeks?
Well, that's a good question. It was very interesting. You start to see the market making the highs, and the futures markets, and really the cash cattle market as well. A lot of people would say that, futures end up dictating what the cash market does, but I would argue that's not true. It's actually the opposite. Especially in the feeder cattle world, we have to expire or settle our front month contract into a feeder cattle index that's cash settled. And with that in mind, probably for the last, 8 to 12 months, we've had a positive basis, meaning that the cash market has been above the futures contracts, and which has been pretty incredible that the levels that these values have been at, but it's been driven by the cash market. And that's a demand driven type of situation scenario that has been occurring. I think another thing that was caught up in the futures market, not only did we see the physically cattle being very high priced, but also futures, were behind, and there was a large contingency of funds or speculators who were also involved in futures, in the futures market. And so as they saw opportunity to buy futures, given what the cash market was doing, we saw, and I've pulled it up just uh, the commitment of traders, a CFTC puts out the commitment of traders to help us understand, where those certain categories of traders are. And we achieve record levels between not only the speculative long position, and I say speculative, fund manager, fund money, speculative money, relative to the hedger, the producer merchant, who would be on the other side of that position, and they were historically short. And up until a few weeks ago, when the government shut down, I believe the last data that we have was back on September 23rd. And it's already started to show some deflation in the quantity of those contracts. But in the feeder cattle market itself, we achieved just under 38,000 contracts of length, while the producer merchant side was about short, just over 17,000 contracts, 18,000 contracts. And up to September 23rd, we'd begun to see, some of the erosion of those positions, i.e., if everybody runs to the door trying to get in or get out of these markets, the market can move very quickly. And with the feeder cattle market, we've seen limit moves, daily limit moves now multiple days, as people try to begin to, if they don't like their position, then they've got to get out, and everybody runs to the door at the same time. We go into those limit type of situations. I think, the trader sentiment, if you will, relative to the fundamental change that has maybe been talked about. I think, anytime that President Trump puts a commodity in his Truth Social, obviously suddenly that commodity gets some volatility, and that's also what's contributed to this. As he said that we've worked out a deal with Brazil to take back the 50% tariffs he added on a couple months ago. in retaliation. Even though that's been talked about, that has not been implemented as of now that at least last I heard. And so you've got a lot of things going on, Nate, I guess, from the standpoint of what's driving these markets. There's a lot of irons in the fire at the moment.
So I think the futures have dropped about 10% from that peak that was made just before Trump announced more product coming in from Argentina and then discussions with Brazil, et cetera. Have you seen cash cattle prices drop by a similar amount, or is cash still staying fairly strong?
Well, on the initial break, we weren't seeing an immediate reflection in the cash market, the cash barns. But after the futures have dropped the way that they have, I think a lot of the buyers have sort of clammed up, if you will. The adage is if I could buy it here, this week, and the way we're going at the moment, next week it'll be cheaper. Why would I buy it this week when I can buy it cheaper next week? So there's an attitude right now, again, on the buyer side. I think, why would I catch a falling knife? And I think, that translates back into the sales barn as well. Um, I know, does that mean that beef demand has gone down? Does that mean that packer demand has gone down? Does that mean that these people, something's changed that, just over the past week, we've found a whole bunch more cattle or beef? Those things haven't happened as much as the psychology of the marketplace had changed. And frankly, in my outside perspective, in my opinion, you've seen a correction that was long overdue in this market, a technical correction that has occurred that the fundamental market's not sure of how to perceive that. Is that a policy change? Are we doing something with these other countries to import beef, enough beef to upset or change the degree of our beef prices? I think we've got a disassociation between a cattle market that's still very short here domestically or herd relative to the amount of beef the consumers willing to and the price they're willing to pay for that beef, the amount of beef that they're consuming. What we haven't seen, which has been very fascinating as translate back to the other proteins, and that is we have not seen really a jettison of that beef. It's not like the consumer is trading down to pork or poultry, chicken or pork, and the idea that and you're probably seeing some of that into the chicken, maybe not so much into the pork, but I think they've maybe they're supporting those lower prices, that those particular products might be lower this time of the year, but beef prices still very high. But I think again that the taste, the flavor, the consumer, it's very hard to replicate that, and I think that's something that they're still willing to pay for, and they have the financial capability to do that. That becomes a challenge and probably something that will be debated over the next several weeks, and the government shutdown and some of the other things that are going on as to what the consumer is thinking and how are they feeling in the big picture, and are they still willing to spend that money on those products.
Yeah. I I agree. It's hard to replicate the taste of beef in the other products. But man, I was at the grocery store this week, and my 93% lean ground beef was over $7 a pound, and I could buy lean pork chops for 250 a pound in a big value pack, right? Like at some point, the price spread overcomes the taste, right? But I know I still bought the beef anyways.
What's interesting too is that the pork industry has created, I don't know if you saw it there, it doesn't sound like it, but they also have ground pork that's next to the ground beef. And you'd think, well, that should be, to your point, the pork chop, it should be a lot cheaper than the beef, but they've taken that and they've priced it somewhat equally. And that's where the margins are being made at the grocers, in their margins, and their bottom line is that they're able to raise those other subsequent prices to match up with where beef would be to make a better margin. It may be not quite as expensive, but it's still, they're not making a lot of money on that beef, but where they're making their money is on the pork and the poultry.
Interesting. Yeah, I did see like a sausage, ground sausage mix. It's probably mostly or all pork, and that was $4 a pound.
A little better.
Um,
Yeah.
so yeah. So from your perspective, not a whole lot has changed in the supply and demand of cattle within the U.S., and the decline that we've seen in prices is just a little bit of a setback, a little bit of a correction. in an otherwise strong market?
I that's the way I would see it today. I think that the cattle buying industry is a little bit guarded, just due to the fact of what the policy is from the White House regarding more importation of beef. Um, I think again the demand on the consumer side, and I think this sort of translates this back to the choice box beef, choice select beef. When we look at that on a daily basis, when we see those values that are get quoted to us, that those prices were coming down at the beginning part of September, while feeder cattle and fat cattle values were still running up to hit their highs. And now, as those cattle prices have turned and come down, interestingly enough, the beef prices are gravitating back up again. And to put that in perspective, if choice beef got up to just under $4.20 a pound, it backed off to about 350, and now has gravitated back up towards 380, which again doesn't necessarily reflect the dramatic decline the cattle market has gone through, especially the futures. So as I'm trying to speak to producers and my customers that are feeder cattle, producers, and what to make of this market, I think the bottom line is that when you take it away, that the fundamentals haven't changed from the standpoint that more cattle aren't coming into the sale barn tomorrow or next week or next month, for that matter. And even if the Mexican border gets opened, you probably will not see a huge influx. It may, I think from the standpoint of seeing a big futures market break, that an opening of the border uh, would have maybe contributed to that. We didn't open the border and we had a huge break. Even if if there's some kind of agreement, and Mexico had a contingency up here talking with USDA this last week about reopening the border. Bottom line is, this is a foreign animal disease. The United States cannot afford. We still export beef, surprisingly enough, with as much beef as we need and are importing. We still do export beef, and if we get a foreign animal disease in this country, our border will shut down as well, and we will not be exporting beef, when we'll probably be threatening some of the other protein industry as well, the hogs, the uh, you know poultry, I mean, turkeys and broilers, layers, those all, again, I haven't heard a lot out of those industries because the cattle industry has been so vocal about the new world screwworm. But I think that's something else that's very concerning in these other animals. A lot of those, again, talking with some people, most of those other industries like the hogs and poultry are in confinement spaces and not as exposed to fly transmissions. But again, I think it's a big issue, and certainly having a foreign animal disease in our country is not a positive thing. It'd be very hard for them to open the border. They've talked about it in Texas about, different things, quarantining, dipping the cattle before they come across, making sure they aren't bringing any larvae with them. But I think these are things that are long periods of time to get any sort of amount of animals that would solve the problem we have today.
Yeah, I'm with you. I think the risks to opening the border are just too great right now, and so I think that's low probability. But with that, thank you for your time today, Gavin.
Appreciate it, Nate. Thank you. Have a great day.
The StoneX Dairy Team spans the US, EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange traded and over-the-counter, under derivatives, risk management, global payments, and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National International Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC Registered Investment Advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales, company No. 5,616,586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446,717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA. SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier Registration No. P00000-012 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. StoneX Financial Pte Ltd Co. Reg. No. 2011305988R SFP is regulated by the Monetary Authority of Singapore and is a capital market service licensee for dealing in capital market products, an exempt financial advisor for advising on investment products and issuing or promulgating analyses/reports on investment products, and a major payment institution for cross-border money transfer service. StoneX Financial HK Limited C. No. BCQ 152 SHK is regulated by the Hong Kong Securities and Futures Commission for dealing in futures contracts. StoneX Group Inc. acts as agent for SFL in New York with respect to its payment services business. StoneX Financial Thai Limited SFA Akin 141774727 holds an Australian financial service license and is regulated by the Australian Securities and Investments Commission AFSL 345646. StoneX Securities Co. Limited SSJ Co. Reg. No. 010401047199 is regulated by the Japanese Financial Services Agency as a Type I Financial Instruments Business Operator. Kanto Local Finance Bureau FIBO No. 291 is a member of the Financial Futures Association of Japan for dealing and broking FX and FX option transactions, and is a member of the Japan Securities Dealers Association for dealing and broking stock indices and option transactions. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any financial product. It does not take into account your particular investment objectives, financial situation, or needs, and does not create a binding obligation on any of the StoneX Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you. This material should be construed as the solicitation of an account, order, and/or services provided by the FCM division of StoneX Financial Inc., SFI NFA ID 0476094 or StoneX Markets LLC SXM NFA ID 0449652 and represents the opinions and viewpoints of the individual authors or presenters and does not necessarily reflect the viewpoints of SFI or SXM. It does not constitute an individualized recommendation or take into account the particular trading objectives, financial situations, or needs of individual customers. Additionally, this material should not be construed as research material. The trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. All references to and discussion of OTC products or swaps are made solely on behalf of SXM. All references to futures and options on futures trading are made solely on behalf of SFI. SXM products are intended to be traded only by individuals or firms who qualify under CFTC rules as an eligible contract participant and who have been accepted as customers of SXM. SFI and SXM are not responsible for any redistribution of this material by third parties or any trading decisions taken by persons not intended to view this material. Information contained herein was obtained from sources believed to be reliable, but is not guaranteed as to its accuracy. Contact designated personnel from SFI or SXM for specific trading advice to meet your trading preferences. SFP may distribute analysis/report produced by its respective foreign affiliates within the StoneX Group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. Recipients should contact SFP at 656-309-1000 for any matters arising from or in connection with this podcast. No part of this material may be copied or duplicated in any form by any means or redistributed without the prior written consent of StoneX Group Inc. The podcast herein is not directed to or intended for distribution to or use by any person or entity who is a citizen or resident of or located in any locality, state, country, or other jurisdiction where such distribution, publication, availability, or use would be contrary to law or regulation. Copyright 2024 StoneX Group Inc. All rights reserved.